So it might be a bit of a tricky strategy to follow because of the the loss percentage versus your the profit that you end up making with those.
So is that the range of the EPF over the time period? I mean, generally could you have hit your 5% profit and then that wick in the bottom, could that have happened after the profits were taken?
These candles are for the duration of the trade.
Okay, for the duration of the trade. All right, that makes sense to me. Well, that really is good information. I mean, you can see your holding period, optimum holding periods, and where your stops may be triggered.
I think it's great for developing a system and seeing, visually be able to see exactly what's been happening. And the visual aspect is I'm kind of a visual person, so I like the visual aspects of looking at this stuff and being able to just click through to see the actual trades on a real stock chart. That kind of is where the program kind of developed from. That whole idea of being able to look at each stage individually and get this kind of visual information.
So you have all kinds of exits now, and
right.
I see you have a high trailing.
Yeah. So we're just talking about our stop exits right now. We haven't even looked at the the exit events, but that's another very interesting area.
Okay, let's move on to that.
Because this we've picked out the top 4 stocks on a daily basis, but potentially you might want to stay in those trades not for a fixed amount of time, but until they fall out of the top percentage, the top relative performers. Maybe you want to sell them when they enter into the bottom 50% of relative strength. So what we can do, very similar to the entries, we can put in our exits, use the same ranking, but this time we'll choose the bottom, not top, we'll choose the bottom 10, and we'll populate this exit signal grid with the bottom 10 rankings. Okay, now these become signals for exiting the trade, and so you can go back to the trade simulation, and you can now say, instead of fixed hold period, you can say use these exit events, and then run the trade again, run the simulation again, and now we've got a strategy which is properly getting you in on good relative strength, getting you out on mediocre relative strength.
Okay, and it did fine. I mean, your average hold is down to 7.
Yeah, and I'd say
the profits aren't nearly as good as they were before.
Yeah, and I just took off the profit stop because I wanted to just show you, if you're not having any stops in, it gives you a more raw view of those signals, right? Without applying any other stops. So now you can see that the average hold was actually 12 days when there's no profit or loss stop in there. So what that means is that on average, when a stock made it into the top 4 in terms of relative strength, it didn't get into the bottom 50% until 12 days later.
Which is a pretty good run.
It is a pretty good run. And the chart here shows, you can see that it is again skewed to the upside, which is good. You can see our maximum loss was down at minus 10%, but the maximum gain was up at 30. And then we had, if you take the minus 10 and then you go on the positive side and you say, well, plus 10 will be, that's about there. All of these stocks made more, and this is the long tail essentially that you're looking for when you're trading. You're looking for these things that are not, these are the things that are going to make you a lot of money, right here.
Mm-hmm.
I mean, these will make you some money. These will make you money too, but these will lose you money. But these will make you a lot of money.
So on those 828 trades, that's from the market bottom through the end of the year. If you were to take every ETF which rotated into the top 4, Now, are those long side trades only, or are those both?
Well,
in
we
and
can
out?
specify what we want them to be, but they're set here to be long side trades only. Yeah, so those
Okay, so those are entry trades.
they are long entries. You can have them as short entries if you wish. Essentially, that's just going to reverse the situation, but you could have them as short entries. But we're looking at long ones. And another thing that is interesting to do is if you know now you've got ETFs that are both inverse ETFs and non regular ETFs. Well, you can populate your snapshot with a collection of inverse ETFs and non-inverse ETFs, and see how they rank. And what you'll end up doing there is, if you're picking the top 4, you'll actually the ones that come to the top in a bear market will be the inverse ETFs. And so that's a way of using a long-only strategy to actually trade a down market, or a market that's shifting and changing, oscillating from rally to sell off to rally again.
Okay, so we're going to have to try that in one of these movies. See
Absolutely, yeah, that's a really good one. Okay, the only difference now is because we've got entry signals, we should see them we've got exit signals, we should also see them in this exit signal grid. So now we have a list of entries and a list of exits. And you can do the same highlighting with those two.
Okay, and these are the bottom 10,
right?
Bottom 10 plus the index?
I chose not to put the index in.
Oh, it's bottom 10.
I chose not to put the index in. And it says 11 just because this is an Excel spreadsheet, essentially, and it starts numbering at 1 is the date. Yeah, so it's the bottom 10.
Okay, now if we drop that down to, on the exits, to the bottom 5, let's see how that changes the results.
Okay, so we go to the exits. We're here. We're going to take 5 instead and hit that. Now we go back to the trade simulation, and this time we have to run this simulation again. And
wow, it boosted the average hold period and the profit and loss.
Yeah, and so to me that makes sense in a bull market.
Right, we were in a bull market, but I don't. Well, obviously, if you were in a bear market, you'd want to be trading the inverse funds too. Well, that covers a lot of material. Is there anything else you want to show, or?
Well, maybe we'll call it a day for now, and we can do some more at another time. But because I think there's a lot of material to digest right there, and we don't want to confuse too many people.
There is, and just point out quickly all the other indicators that you can test in this program, and then we'll end it.
Okay, so we've got there's various ways of putting indicators in here, and what you're seeing here is what I call managed code, and this section here contains a lot of stuff. There's a whole bunch of candle patterns. There's some indicators like the alpha indicator. I shouldn't call them indicators. These are really your ranking selectors. And then there's a bunch of regular security selectors. Now there aren't that many in the managed area, but if you go into the chart scripting area, now you're going to get to see all of the different scans you can do. And chart script is something that's more easily accessible to people to program their own indicators. This is easier to see if we go over to the security chart, because now you can see a list of all of the indicators that are built into the system. There's quite a few of those.
Okay, maybe we should make that the subject of the next one.
That sounds like a good idea. We can even look at developing our own scan for force index, as we were talking about, or for the Bongo Weekly, and we could do something on that.
Sure. Well, that sounds good.
Great.
I think we've spent a lot of time on this, much more than I thought we would, but there is a lot to cover.
Yeah, there is, but I think it's been good. Thanks for taking the time out to talk about this.
Okay, Chris, and
Yeah,
thank
no
you.
problems.
Okay, good.
Bye, Ron.
Bye.